How will the Canadian federal budget impact real estate investing? With me, RE/MAX Realtor Carmen. The new budget, effective June 25th, 2024, is the Canadian government's plan to build more homes faster, help make life cost less, and grow the economy in a way that helps every generation get ahead. These include significant changes for real estate investors. So what are the proposed changes? Well, before we begin, it's important for me to say that this is real estate guidance, not tax advice. The information I share in this video is based on general tax information. As a realtor, I'm an expert in real estate. I'm not a tax professional, and any information here should not be taken as tax advice. Now back to those proposed changes. I'll try to keep this simple as possible. In Canada, when you sell an investment property, the government can tax you on the profit earned on the sale. This is called capital gains. Currently, both corporate and non-corporate investors must pay tax on 50% of all profits. So for example, let's say you sell an investment property for a profit of $600,000. You will be taxed on $300,000 of that, which is half of the $600,000, at whatever your income tax bracket is. Now, starting June 25th, 2024, the government will still tax on 50% of the profits, but only up to $250,000. Any capital gains over $250,000 will now be taxed on 2/3 or 66.67%. Now let's go back to our previous example where you sold an investment property and had capital gains of $600,000. You will still be taxed on 50%, but only on the first $250,000, which would be $125,000, and taxed on 2/3 or 66.67% of the remaining balance, which in this example is $350,000. 2/3 of $350,000 is approximately $233,345. So you add that to the $125,000, and you get a new taxable income of $358,333. Your new total taxable income will be almost $60,000 more under the proposed budget changes, and that's why with these new changes coming into effect June 25th, all investment strategies must be revisited. Now for corporations, they are proposed to be taxed on 66.67% of all gains, meaning that unlike for individuals, there is no relief on the first $250,000. There are some new changes coming to the Home Buyers Plan as well. The Home Buyers Plan is a program that allows you to withdraw from your RSP account to buy or build a qualifying home for yourself or for a specified disabled person. Currently, you could withdraw up to $35,000 from your RSP account to use towards buying a home. They're upping this to $60,000, allowing you to save more for a down payment without a tax penalty. This still applies separately per person, so a home buying couple would be able to benefit from 2 times $60,000 or $120,000 in down payment total. The government is also increasing the amortization period allowed for first-time home buyer insured mortgages. Currently, the amortization period for insured mortgages is 25 years. This is going up to 30 years effective August 1st, 2024. If you aren't too familiar about the Home Buyers Plan, I do have a video about it. You can learn more about the plan in that video and to see how to qualify for it. The link will be in the description below. Back to the budget. There are a few additional changes to consider. There is an increase in the lifetime capital gains exemption from $1 million to $1.25 million for small businesses, farms, and qualifying fish properties. There is a new Canadian Entrepreneurs Incentive, which offers a reduced tax rate on capital gains from certain small business shares, capped at $2 million over a lifetime. Additionally, there are changes to alternative minimum tax rules, including better terms for charitable donations and some income deductions. Now, how will this impact you? Well, if you're a real estate investor in Ontario or you'd like to become one, understanding the tax implications of your investment plans are paramount to your success. Here are 3 conversations that I'm having with my real estate investor clients right now in light of these new changes. 1, we're doing a cost-benefit analysis on every property. We need to reassess the profitability of buying and selling properties, as the increased tax burden will affect the overall returns, potentially making some investment properties less appealing. We're also looking at the timing of sales more closely. For example, realizing a gain just below the $250,000 threshold in 1 year, rather than exceeding it, could reduce the tax liability. And finally, we are revisiting our holding strategy. The increased tax might encourage some of you to hold on to your property longer to benefit from property value appreciation over time, since some shorter-term sales might not make as much financial sense anymore. On the other hand, some investors may consider offloading sooner to lock in current gains and avoid the higher taxes over the $250,000 profit. These changes will impact all of us, whether we are tenants, homeowners, investors, or wannabe investors. So how will these changes impact the real estate market? Short term, I think we'll see an increase of property on the market, especially from investors who are looking to dump them to avoid the higher tax hits that will come after June 25th. This will bring more supply to the market, potentially stabilizing or causing a temporary dip in prices. Over the long term, I think there'll be a decreased selling incentive for investors, which could potentially reduce the turnover of available properties on the market. If there's limited inventory, we all know what this does to property prices. I think we'll see an increased demand on entry-level homes because of the changes to the first-time home buyer plan. Fun little side note, for those of you that are thinking of buying your first home or your first investment, you might be interested to know that at the time of recording this video, the average condo apartment in the GTA sits at around $700,000. Even if you don't have a 20% down payment, which in this case would be $140,000, and you can't avoid getting an insured mortgage, if you're a first-time home buyer, you now have access to more money as of August 1st, when the mortgage amortization periods are extended from 25 years to 30 years. This will effectively reduce how much you have to pay each month to finance your home. Whether you have a modest real estate investment portfolio or you're just beginning to dream up about buying your first home and you want to learn more about this or talk about your options, I can help you. I provide detailed local market insights, news, and statistics each month, as well as property valuations, giving people more opportunity to plan for their future. I find that once people have access to market information and professional property assessments, both current and projected, they can make a better decision about when to buy or when to sell. I also give pretty good advice. For example, in light of the new budget changes, I can advise you on what areas are appreciating in value faster and are likely to hit that $250,000 mark in a desirable time frame that would work for you. When you're connected with me, I will help you identify the potential risks and benefits of your options. I make a point to ensure everyone I help stays updated on all relevant real estate changes that could impact their properties and their profitability. Nothing is more expensive than a missed opportunity. If you think you would benefit from my services, I have a link in the description below. You can sign up for my monthly newsletter. It's completely free and you can start from there. If you want to connect with me more directly, you can email me at carmen@lombardihomes.com. So, what do you think about the proposed changes in the new 2024 federal budget? Do you think it will impact the real estate market? And if so, how? I'm curious to read your thoughts in the comment section below. And lastly, as always, thank you so much for your time in watching my video. I hope you found it interesting and informative.